Hello friends, welcome back to Striving Aspirants. Today in this video presentation, we check the financial statement balance sheet and the necessary items coming under the balance sheet. As we know, the balance sheet is prepared with the intention of knowing the financial position of a business at the end of an accounting period. We have started the accounting process by referring to the source documents we have, such as invoice, bills, vouchers, whatever we have. Then we have prepared the journal with the help of the source documents. After completion of journal entries, we have came to the ledger accounts. After that, we have summarized all the ledger accounts and we have prepared the trial balance. Finally, the preparation of financial statements, which constitutes profit and loss account and the balance sheet. Balance sheet shows the capital we have. It shows the summary of all the assets and the liabilities or obligations of a business. Why it is called as balance sheet? Because after the preparation of trading and profit and loss account, whatever ledger accounts balance we have, that will go to balance sheet. And the same is done with the help of an opening entry made in the journal at the beginning of the next year. Balance sheet is having two columns. In the left hand side, we enter all the capital amounts and the liabilities amounts. And in the right side of balance sheet, we show all the assets amounts we have. Proprietary and partnership firms doesn't have any prescribed form of balance sheet. Still, Schedule 6 Part 1 of Companies Act 1956 prescribes the format and the order in which the assets and liabilities of a company should be shown. Now let us check the items coming under the liability side of balance sheet. First one is capital or share capital. As we know, it is the amount contributed by the proprietor or partners when they start their business. In other words, we can say this amount is the excess of assets over the liabilities due to outsiders. This is the first item we show in the liability side of a balance sheet with all the necessary details like authorized capital, issue, paid up capital in terms of number and the amount of each type of shares. If the proprietor is taking some money from the capital amounts, that amount is called as drawings. In such a case, we have to deduct that amount from the capital and we have to show in the liability side of balance sheet if in case there is a drawings amounts. Second item we see in the liability side of balance sheet is the reserves and surplus. This item includes various reserves such as capital reserve, capital redemption reserve, balance of securities premium account, general reserve, credit balance of profit and loss account, and if there is any other reserves, specifying the nature of each reserve and the amount in respect thereof, including the additions during that current year. Next item we can see in the liability side is secured loans. This is all about the long-term liabilities. This type of liabilities will be payable after 1 year. Secured loans are the long-term loans which will be taken by the company by giving some sort of security The examples include debentures and secured loans and advance from banks and other financial institutions or subsidiary companies, etc. The next one is unsecured loans. Here in this case, there will not be any security provided while taking these amounts. This item include public deposit, unsecured loans and advance from subsidiary companies, short-term loans on advance and other loans and advance from banks. Next item or next head which comes under the liability side of balance sheet is current liabilities and provisions. Liabilities that will be settled or paid within a year, that is called as current liabilities, and which is required to pay out of current assets. The examples include bank overdraft, bills payable, sundry creditors, short-term loans, outstanding expense acceptances, advance payments and unexpired discounts, unclaimed dividends, interest accrued but not paid, and other liabilities, etc. Similarly, provisions, that is also certain amounts we are setting aside out of revenue profits for some specific liabilities payable within a period of 1 year. This include provisions for taxation, proposed dividends, provision for contingencies, provision for provident fund, provision for insurance, pension and similar staff benefit schemes, etc. Next, we will check the items or heads that will come under asset side of balance sheet. First and foremost important items that will be fixed assets. Fixed assets means the assets which will be in the organization or company for a long time basis. These assets which will be taken or purchased with the intention of not for the purpose of resale. Means these fixed assets will be remaining for more than 1 or 2 years in the business or company or the organization we are dealing with. Examples include land, building, plant and machinery, furniture and fixtures, goodwill, leaseholds, railway sidings, patents, livestock, and if we have the vehicles, that is also fixed assets. The term fixed block or block capital is also used to indicate fixed assets. These assets will be shown at costless depreciation till the date. The assets which cannot be seen or touched, that is called as intangible assets, which include goodwill, patents, trademarks, etc. Next item or the next head we show in the asset side is investments, which represents the funds invested in government securities, shares of a company, etc. They are shown at cost price, and in the time of balance sheet preparation, if the market price of investment is lower than the cost price, then a footnote to that effect may be altered in the balance sheet. Investment constitute investment in government securities or trust securities, investment in shares, debentures and bonds of other companies, immovable properties, etc. Next head is current assets, loans and advances. Current assets which will be available in the company in the form of cash or can be converted into cash within a year. Examples include cash in hand or bank, bills receivable, stock of raw materials, semi-finished goods and finished goods, sundry debtors, short-term investment, interest accrued on investments, inventories and other advance like prepaid expense, etc. Next head is miscellaneous expenditure. Here we usually show some expenditure which is not written down fully and the balance remain. These constitute preliminary expense, advertisement expenditure, discount on issue of shares and debenture, share issue expense, etc. And the final head is profit and loss account. If there is a debit balance of profit and loss account amount, then that loss which could not be adjusted again in general reserve, which will be shown under this head. Now we will check the horizontal and vertical balance sheet. First we will look into the horizontal balance sheet. Here in the left side we can see the liabilities items, then amount, and in the right side we can see the assets column and the amount column. Let us check the liability side. First one is share capital. Under share capital we will add authorized preference and equity shares. We will give the amounts. Then whatever issued share capital, that amount we will add both equity and preference share capital. Then if there is any unpaid calls for the shares, then that amount will be deducted, and if there is any forfeited shares, that amount will be added. Second head we can see in the liability side here, reserves and surplus, under which we will add capital reserve, capital retention reserve, securities premium, other reserves if any, then profit and loss account. This profit and loss account means the credit balance of profit and loss account, that will be taken here. The third head is secured loans, under which we will add debentures, loans and advance from banks, loans and advance from subsidiary companies, other loans and advances. Now let's come to the asset side here in the right side. First item or first head is fixed assets, under which we will add all the fixed assets. Some common fixed assets include goodwill, land, building, household premises, railway sidings, plant and machinery, furniture and fixtures and fittings, patents and trademarks, livestock, vehicles, etc. The second head in the asset side is investments, under which we will take government or trust securities, shares, debentures, bonds, etc. The third head in the asset side is current assets and loans and advances. Under current assets we will take interest accrued amount, stores and spare parts, loose tools, stock in trade, work in progress amount, sundry debtors, and cash and bank balances. Now we will check the second slide. This is the continuation of horizontal balance sheet. The liability side we can see next head is unsecured loans, under which we will add fixed deposits, loans and advance from subsidiaries, short-term loans and advance, other loans and advances. Next item or next head under liability side is current liabilities and provisions. Under current liabilities we will add acceptances, sundry creditors, outstanding expenses. And under provisions we will take provision for taxations, provision for dividends, provision for contingencies, provision for provident fund schemes, provision for insurance, pension and other similar benefits. Now let us check the asset side again. Here we can see loans and advances, under which we will take advances and loans to subsidiary companies, bills receivable, advance payments. Next head in the asset side is miscellaneous expenditure, under which we will add preliminary expense, discount on issue of shares and debenture. And in the last head, profit and loss account, If there is debit balance, we have to take that amount here. So this is the complete format of horizontal balance sheet. Now we will check the vertical format of balance sheet. In the vertical format of balance sheet, there are two broad heads which include sources of funds and the application of funds. First we will check the sources of fund items. The first item under sources of fund is shareholders fund, which include share capital and reserves and surplus. After adding, we will get the net worth or shareholders fund value. And the second item under sources of fund is loan funds, which constitute secured loans and unsecured loans. After adding these two items, we will get the total capital employed amount. Now we will check the application of fund items. First one is fixed assets, which constitute four items, that is gross block less depreciation of whatever assets we have taken into consideration. Then we will get the net amount, then add capital work in progress amount also. Second head is investments, and third head is current assets, loans and advances, which include main items: inventories, sundry debtors, cash and bank balances, other current assets, loans and advances. After this head, we have to deduct whatever current liabilities and provisions amount we have. So you will be in a position to get the net current assets value. After that, whatever miscellaneous expenditure, to the extent not written off or adjusted, that amount need to take into consideration. And finally, if there is any debit balance, profit and loss account, that amount also need to take into consideration here under the application of funds head. So that is the complete vertical format of balance sheet here. So that's all about the balance sheet and the items coming under the balance sheet. I hope you got a simple idea regarding the balance sheet and the items. We will see in the next video presentation. Until then, it's bye from Striving Aspirants. Take care, bye bye.